The all-share index ended the session in positive territory today, higher by 0.52%. Industrials are closing just under 1% to the good, while financials, bit of pressure, down by 0.32%. Resources closing higher by 0.49%. In studio now to talk markets is Warren Jeffery from Nedbank Private Wealth. Warren, always nice to see you. Welcome.
Thanks for having me.
Let's start with the US jobs number in at 261,000. Not much reaction from the markets.
So a little bit of a flick-flack reaction. They were originally anticipating 325,000, so the jobs number did come out lower. But thrown into the mix, we had the hurricane Irma and so on in terms of the impact. So a little bit fuzzy in terms of the actual impact that had on the jobs numbers. But the general sentiment is this is actually quite a strong number, and especially if you combine it, US unemployment dropping from 4.2% to 4.1%. The job market's getting tighter and tighter in the US. It's a good thing in terms of showing growth in the economy. And on the back of that, you started to see a bit later in today's trade, the US dollar actually starting to strengthen quite significantly.
Yeah.
So I saw we were at about 14.23, 14.24.
Yeah. We're going to get onto the rand right now, but I have to ask you about today's big story, which is Lonmin, that share price getting knocked 28%.
Yeah. So Lonmin coming out with a trading update today. I think disappointing the market, basically reporting, a bit of a mixed bag in terms of production from their different operations. But on top of that, their costs are going up, and the market, in terms of the profits to be made, in terms of platinum price, attributed it to a stronger rand, heading down. And I think there's a bit of general disappointment in the platinum sector at the moment. Add to that the macro picture of lower and lower usage of catalytic converters going forward, and we're starting to look at a tough picture.
But the particular concern about Lonmin is that the book value of the assets may now be below the level agreed to by lenders, which steers the company towards concerns about going concern, which is really an issue for shareholders.
So, I mean, definitely to the point of being able to secure finance and that going forward. We've seen Lonmin come to the market to raise funds before. Obviously, I don't think that's going to go down well again if they have to do that, because it starts to become seen as a bit of a money pit. So that would be the concern around that front. Share price has been hit harder than this before.
What do shareholders do if you're a holder of Lonmin? What do you do right now?
I think it's a very tough call. Fortunately for the most part on our front, we're not sitting in it, but I think, it might be the time where you actually bite the bullet and take the loss. It depends on your portfolio. It depends how speculative you are. But for
risk averse you are.
For most conservative
and
guys,
Lonmin's costs are higher than the other guys.
I think at this stage, they are higher in general than the likes of your Impala Platinum, Northern Platinum. Again, it depends what you put in those costs. In terms of coming up with your actual continuing operations costs. So we see those numbers move around a lot. I think the challenge that you see is when your costs of operation are going up while your actual profits are not.
Yeah. Okay, so let's get on to the ailing rand. 14.25 it could tend weaker because S&P is in town and it talks of a downgrade. Moody's in town next week.
Yeah. So, look, currency, I mean, it's been quite volatile. We actually saw it blow out just after the midterm budget, went to 14.36, and then a recovery to as low as 13.90 yesterday. So we started seeing a bit more weakness during the course of the day today, and that started picking up a bit of speed, particularly on the US Open. We started seeing the rand coming under some pressure. And I think there's a bit of a twofold story playing out there. On the one front, you've got SA markets not exactly screaming confident place for investors to be, but then on the back of that, the US strength is starting to show through, and on top of it, you got the UK Bank of England basically raising rates, which means that you're starting to get more attractive alternatives to start putting currency into.
And of course, the big concern after Moody's comes into town is, are we going to fall out of the global bond index, which is more outflows? Okay, I want to talk about the international tech stocks because Apple came out with stellar Q4 earnings and higher expected earnings in Q1, and target price for that stock is $1 trillion.
Yeah, so quite a material number. And I mean, obviously, a lot of those are built forward on forward earnings and forward projections. So, I mean, most of those tech stocks, if you measure their net asset value, you know, it falls quite a long way behind where the market cap is. I think, you know, more for the South African investor, and the relevance there is what we're starting to see is a lot of excitement around those tech stocks, and you know, in that mix you can throw a 10 cent, which is starting to on the, you know, feeding Naspers share price, which seems to just end up permanently. But what there is quite a lot of talk around at the moment is, particularly in the US, a lot of the fear of missing out. They call it FOMO investing. And essentially, you know, investors see this running and running and running, and everyone's sitting on the side waiting for the pullback to get their money in. And eventually you get tired of waiting and you start committing
Just
funds.
briefly, which of the local tech stocks do you like?
So we do like Naspers. I think, you know, Naspers is ultimately a tech stock via its holding in 10 cent. Look, the share price has run quite hard, but you know, there's probably still more room for it. We wouldn't rush out and chase it, but it's definitely one that we do hold in our portfolios and want to keep.
Okay, before I let you go, who's your stock pick?
At this stage, I think Reinet. You know, they've got quite a nice underpin of a holding in British American tobacco. I think if we are looking at a bit of a potentially shaky next few months with the rand, it's quite nice to have a bit of a rand-hedge counter in your portfolio.
Yeah.
And on top of that, you're getting it at quite a nice discount to its net asset value. You're probably getting close to 30% discount at current pricing. So the combination of the two makes it quite a nice one to put a bit of stability into your portfolio.
So Reinet it is. Warren, thanks so much for coming in today.
Thank you.
That was Warren Jeffery from Nedbank Private Wealth.